Good afternoon, everyone. This is Henry, and as we get into tonight's video, I wanted to give you a strategy here at this moment in time that I think is very much worth your consideration. Now, the spread in general would have been a little bit better around midday today because, the S&P sold off into the close. So what I'm about to show you, the credit in it definitely contracts some. But the big theme here is that you have this old swing high and just a huge psychological value at 4,600. So do we pull back from that in a big way, or do we casually drift up there and eventually get 4,600? It's hard for me to see more of a straight up move. Of course, it could happen, but if you feel the same way, then this is one spread worth thinking about. So the Unbalanced Butterfly that utilizes the $4,600 call, right at the heart of this strategy, is that short call. Now, granted, the markets are closed right now, so this credit may not be as applicable, and it is a small credit at 10 cents. But remember, I'm not showing this to you for the benefit of a 10-cent credit. Like, an iron condor for 10 cents would be a waste of time. But with something like this, let's say you do put it on for a 10-cent credit and the S&P just moves lower. Well, then you'll make enough money to cover your commissions, right? It's a small gain. But if you push up into 4,600, that's actually where you could make upwards of $4 or $5 with this. And the only way that this strategy really gets hurt is if the S&Ps have another huge up move. So, pricing the spread out here, again, looking at this for the 30th of November, and if the markets are down tomorrow, or, maybe this isn't going for a credit, take this same structure and move it out, right? Instead of looking at the 30th of November, look at the 1st of December. Since we're talking about adding time to the strategy, the options will carry more premium and therefore will go for a more respective credit. So I actually think that this is a viable strategy in every expiration, right? Every expiration out a couple of weeks, maybe 10 days. Now, if you do start blistering up above 4,600, at some point you may want to manage these, but I really do think it's a great strategy for the at 4,600 or below crowd and presents a viable strategy for this particular moment in time. So I hope you find that helpful. I also wanted to let you guys know about a webinar that John and I are doing tonight with Brent from Spot Gamma. I will try to get this into the notes for the video, but if you type this in, just simplertrading.com/hidden-levels, it'll take you to the registration page for the webinar. And even if you can't attend live, signing up will get you the recording. I don't do a lot of this kind of stuff because I'm generally pretty set in my ways, but Brent is one of the smartest minds in the current options community. I'm really excited about getting a chance to share what he's got going on and the tools that we've been using through him. So if you're interested, check it out. Otherwise, you guys have a great rest of your evening, and I hope to see you in the rooms tomorrow. Hey traders, this is Henry with simplertrading.com. I wanted to thank you for watching today's video. I hope you found it helpful, and if so, be sure to click the like and subscribe buttons down below. If you would like to also see me putting these ideas into action and trading my own account live in front of you, be sure to sign up at simplertrading.com, and I hope to see you in the chat room sometime soon.